So I come from an academic folks background. My mom's a professor. My dad was a senior lecturer, PhD. Most of my growing up was in the East. I had an uncle in Lagos who was very senior in banking and very close to us. And during one of my IT, look, come stay with me in Lagos for the holiday. So the Parkway was literally straight out of NYSC.
Really?
Yes.
So you've been an entrepreneur right out of school?
Yes, right out of school. A bunch of NYSC guys. I mean, we're working in the evenings, we meet and plan and do some work code and do stuff. One of these days, my co-founder calls me to say, have I seen so paper? And there was an ad by Interswitch. This was 2004. This guy is called Interswitch. I'd heard about them, but not too much. He advertising for what they call a certified application developer partner. Even though we're building this, these guys are a lot more established. The interesting thing is, we came out tops.
Hi guys, my name is Itimi and you're welcome to another episode of Founders Connect. Here we have conversations, real conversations with amazing entrepreneurs and senior operators in the African tech ecosystem. Today, on this very special episode, I'm having a conversation with Mr. Obi Emetarom. He's the co-founder and CEO of the Zone, and they've been building this company for almost 15 years now. So he's like an OG. We're going to learn all about him, his background, his co-founders, and also what Zone has been building since 2008. So make sure you stay and watch this video to the end. Hi, Mr. Obi.
Yeah, pleasure to be here.
Same here. This episode of Founders Connect is supported by IRL, an original podcast from Mozilla made for people who are into or build AI and develop tech policies. Mozilla IRL is available wherever you listen to your podcast. It is hosted by Bridget Todd, and you can also check it out on irlpodcast.org. It's great, trust me. We start the videos with just getting to know you as a person. So tell me about your background. So where did you grow up? What was school like? What was childhood like?
Interesting. Yeah. So, well, I think one notable thing about growing up, I mean, my folks. So I come from an academic folks background.
Yeah.
My mom's a professor. My dad was a senior lecturer, PhD, before he moved into the government. So basically growing up around the academic environment, university staff schools.
Which staff school is this?
So this was in the Federal University of Technology, Owerri.
Right.
Yes, staff school. Growing up, I think I was a lot more nerdy at that time. You know, a little more nerdy and maybe a little more awkward at that time, and very keen on nerdy stuff, science and technology, even as early as that time. So. Yeah.
What would you say was your favorite childhood memory if you think back at growing up in Futo and environment?
Interesting. My favorite childhood memory, and this is something that doesn't happen nowadays, right? Everybody's so busy and this is Lagos, but we used to actually go on like picnics and stuff, right? So families from within the universities, so other professors, kids, we would go to like a resort or like a lake resort and just set up, you know, for picnics, play with the kids, and the moms would cook and prepare stuff, pastries, cakes, and all of that kind of stuff. And you know, and at intervals, so it would happen now and in another 1 month or in another 1 quarter, and it just kept happening. So those experiences with those childhood friends. Stuff that I really,
Do you still have a lot of childhood friends that are still your friends?
Yes, but really scattered. I mean, we don't have the opportunity to
meet for picnics anymore.
No, for sure. And then many are abroad, you know, moved on to do other stuff. So I would say I don't really have as close contact with them as maybe my university friends.
Right.
Yes.
So let's talk about school, like, because I went through your LinkedIn and it was just Parkway and the Zone. So I'm very curious, like, what schools did you go to and what did you study? Yeah.
So I mean, interestingly, I ended up in Federal University of Technology, where university as well. Yeah. I went to FGC Enugu for secondary school. Mm-hmm. So we relocated from Owerri to Enugu for a bit, and then that's where I studied in FGC Enugu, and then ended up in Futo.
What did you study?
Studying electrical electronics, so majoring in electronic and computer engineering.
Right. So how did you end up in Lagos then?
Yeah, so I mean, most of my growing up was in the East, but then I had an uncle in Lagos who was very senior in banking,
Right.
and very close to us. And during one of my ITs in secondary school, he felt, look, come stay with me in Lagos for the holiday. You know, I'll show you around, show you some of our relations who are in Lagos and so on. And I did that. It was exciting. I saw, of course, we'd been to Lagos a few times as kids, right? But not at that level of as I was getting to become an adult, right? And then also I got the opportunity to meet up a little bit with the corporate world, so friends and colleagues of his. So that was the first sort of stint. And then when I finished school, I wanted to spend more time in Lagos, and I did when I finished secondary school. When I started university, it made sense to think about doing my IT.
Right, in Lagos as well.
Yes, because I already sort of started to build that. And then I did my IT in Lagos, and then naturally as well, NYC.
Right.
So I went back to school.
So any opportunity
NYC,
you had, it was
back here, and then from NYC. Yeah.
That makes sense. So what was your career like before you started Parkway? Parkway.
Yes. So the Parkway was literally straight out of NYC.
Really?
Yes.
So you've been an entrepreneur right out of school?
Yes, right out of school.
Interesting.
Actually, the idea of, that ignited the entrepreneurial activities was some idea that started in school when in my final year. And it was about payment. Funny enough, it was about making payment really frictionless as early as, and this is before all of what we see today. And so when I finished, and I had a few friends who were sort of working on that idea together, two friends particularly, and both of them were based in Lagos, right? When I came to Lagos for NYSC, we now reconnected to start really working on that idea. That idea led us to meet our fourth co-founder, who joined us to start Parkway, the first startup. Yes.
Right. So tell us about Parkway. Like, what was it? What would you say was the thing that you were most proud of for the period of time that you did Parkway before you then exited?
Yeah. So I think Parkway was our entry into the financial services industry, actually. And as I'm sure a lot of people know, the banks are big, sort of closed community, right? Breaking into the banks is not because of trust and credibility issues. But we had an entry through then Interswitch,
right? Because
we were subcontracting development work for the banks, and that exposed us to a lot of the relationships and the way things work in there. So I think the biggest thing I think is a big barrier breaker in there, right? We inherited the credibility Interswitch had, because what happened was that with subcontract, when we go to work, the banks would be like, "Are you from Interswitch?" And we're like, "No, Parkway." And they were like, "Why do these guys keep asking whether we're from Interswitch or Parkway?" But then it led to them being comfortable enough to say, even though this is a much smaller startup, if they can do the work indirectly, then why can't we engage them directly?
Right.
Yeah. So everything else has been built on top of the learnings and relationships
that you got at that
time. Early stage.
That makes sense. So I'm curious, like, if you started Parkway with your co-founders when you just straight out of university, out of NYC, you guys were still really young.
Yes.
How did you manage to even get into the door with Interswitch at the time as well? Like, building like. I mean, so me and my friend Joyce, when we came out of school NYC, we started to build an agency, and we moved from Benin to Lagos. And we used to go around the whole Lagos looking for contracts. It was hard. So I'm thinking, like, how were you able to, like, break it into it?
Yeah, it was similar. I mean, like you guys, I mean, it was always the same story. A bunch of NYC guys, I mean, we're working in the evenings, we meet and plan and do some work, code and do stuff. I'm building our payments idea. And then one of these days, my co-founder calls me to say, "Have I seen so paper?" At that time, newspapers were still a thing, like physical newspapers. So I went bought the newspaper, and there was an ad by Interswitch. Interswitch was still.
And this was like 2008.
This was 2004. Yes, 2004. It's like this guy is called Interswitch. I'd heard about them, but not too much yet. They're advertising for what they called certified application developer partners, CADP or whatever. So he said, look, even though we're building this guys are a lot more established. Maybe in parallel to what we're building, we should try to see how to collaborate. It might be some opportunities. So we applied. Now, what helped us, and because we're really not established, what helped us was we had a senior silent partner who was senior in banking.
Right.
You see, and he was very top in banking, and he was his bank was one of the banks Interswitch was really willing to get on board. And so when we saw the opportunity, we said, if we apply, we may not make it.
So we
called him. We said, look, do you know this guy? He said, yes, of course, I'll take you there. So we went there, and yes, there's a little bit of it. An unspoken, I think it was an unspoken trade by barter. Yes, and we got accepted even though we weren't established. The interesting thing is we came out tops of the program. So the acceptance was there's a training and all of that. So we actually came out tops out of all the companies that came. And so, I mean, literally became the only company. So it was a program supposed to establish quite a number of companies, but we became the only partner doing that for them.
That makes sense. So you said that after, when you guys got into the room and people were speaking to you guys because of Interswitch, and then you didn't realize that this figure that your startup could actually do it, and they started working with you guys. That sounds to me like you then became successful, and you built like a brand for yourself, like as Parkway, outside of Interswitch. So I'm wondering, like, at what point did you not say, okay, no, I don't want to do this anymore, I have to exit and go build something else?
Yeah, so I mean, like you said, yes, we were relatively successful in that regard. The model was different. It was more a build project by project. So you build a separate project. It wasn't really a product model, but I thought I wanted to do more in terms of productizing. You know, the original idea that led to this was more of a product idea, but we had ended up more of a consulting type of subcontractor as a kind of services company, building on a project basis. So, so that was what motivated me. I felt we could do more, especially on the product line. I felt some of the infrastructure that the banks had that we could democratize, because the big banks, they can afford this huge, important, expensive core infrastructure, and then they pay companies like Interswitch and us to build essentially appendages to this imported infrastructure. Yet the smaller, medium-sized banks, MFIs and so on, can't even afford all of that. So I felt there was an opportunity for us to create something, you know, homegrown, that democratizes access to
and what was that transition like, leaving Parkway, starting at the time Appzone? Did you go with the same co-founders? Did you have to find new co-founders? Like, I want the story of the transition.
Yes, the transition was interesting, and something I like to point out. So it was a little bit of I was relatively convinced, but I said, I'll ask my wife. I just got married as well, quite early. And her response really boosted me. Her response was like, you know, you would expect, oh wow, you just get into some level of comfort and you want to start again. Like, and it was the opposite. It was fantastic. Let's go. You know, I almost wanted to say, did you hear me? Like, did you hear me, right? But that really boosted me. And then the transition was, so my brother, who we founded Appzone together, was doing entrepreneurial, was doing a tech, airtime vending tech platform. And it was interesting. I was talking with him about, look, let's just do this way. Incidentally, I didn't know our first employee in Parkway, who now became my co-founder, Wale, at that time I was his boss. So he was quietly talking to my brother as well.
Ah, because he couldn't talk to you.
He couldn't talk to me like they should go do stuff, like how we did. So essentially, my brother Emeka was the link. So it was like, look, okay, Wale is saying we should, like, why don't we just do this together, you know? And that's what. So actually, Wale joined me and Emeka, and then we set up Appzone.
Right. If you think about the very first day of Appzone, that was like 2008. What are the key things that you remember? It could be the challenges. It could also be like, oh, maybe it was very easy. I don't know. But what were like the first, like, oh, we're starting Appzone, the three of us now. This first year, how would you describe it?
It's I can't forget. We had a big unlikely break, and it was quite interesting. A friend of mine who has nothing to do with tech, he's not a tech guy one bit, not based in Lagos at all, just had this vision for, at that time, POS, agent bank, what became agent banking, right? And it was revolutionary, nobody was doing it. And he came all the way, we were in school together, he came all the way to Lagos and hounded us down that he has this time, he wants to sell it to banks. And I'm like, this guy, I think you don't understand the way banks work. Who are you? Just want to show up and just walk into a bank and sell something that is radically different. But long and short, he succeeded. He sold that product. And it was interesting because, just to give you how unlikely it was, hardware and software and consultant, all the services, the budget the bank had to cough up to run that product that he sold was about $500 million at that time. Just some random guy. That's a lot of money at that time. Some random guy. I mean, our portion was just a small portion. Yeah. But I mean, that gives you the extent to which it was unlikely. But it was. I mean, he sold it, and that became our first project. You see, so it launched as a fresh company. Even though we were going to build a product stack, at that time. It's not like now there was no VC funding and all of that stuff. So you literally need to bootstrap product development with projects. So you build one of project by project engagements, and then you take cash flow from that to
build your product.
Yes. So that sort of kickstarted that process for us.
Yeah.
I don't know how we would have, like when I think back, I'm not sure how we would have survived that first year if somehow he wasn't successful.
Yeah, that makes sense.
Yeah.
So what was your role then? If he had already built the POS machine, how the Appzone then?
So the thing is, the product, it was another kind of subcontract. He had the idea. He had the bank sublet to him. I mean outsourced to him, and then he found the POS suppliers for them. He found marketing companies to help market the product, and he needed a tech company to build the software. Got it. We were that company.
So that was how
it was a subcontract actually.
Yeah.
Through him. Yes. Yeah. That's how. So I'm like, if he didn't, and his success required engaging and getting approval at the very time, like the MD at the board. I was on the board. My first board presentation to a bank was with this unknown guy. Like it was very unlikely, but I think it panned out. Yeah.
So aside getting money to then build your product, how else did that project have like a ripple effect? Because like you also mentioned like getting access to speak with boards. So are there other touch points that you said, oh, because of this one thing, we met this person?
Yeah, absolutely. So in terms of actually our flagship product was born out of that. We, in the process of trying to resell that to other banks, we got engaged with one of the banks at that time. And they were like, look, this is nice, but, so here's the thing, we took it to them to say, look, if you guys are not interested in running this because it's mass market and you're unbanked, how about spin it into a play to enable your MFBs, microfinance banks, to do this, provide it for them? And they were like, yes, this is fantastic, but it's not complete. We would need a fuller stack. These guys have bigger gaps beyond agent banking. They don't even have the core infrastructure and so many other things. So if you brought that, then we'll talk.
Right.
And so that ignited the idea for our flagship product, which became SaaS software as a service platform for banking, core banking.
Yeah.
For that category on the cloud.
Yeah.
So yes. It was,
yeah, and for the longest time, that was what Appzone was actually known for. Yeah, because we read anything about it, you say like it's a SaaS banking infrastructure provider.
Yes.
That makes sense. What were the top successes or milestones that you had between 2008 and 2022 when you then pivoted to blockchain?
Yes, so quite a number I can think about. I think the first one was, obviously we grew the SaaS platform. It was a transition, a very interesting transition for me in my career, from a one-off revenue type of model to recurring. It was nice to see recurring revenue. Now I take it for granted, but you know, that time was a big thing, like you're sure.
Yeah.
Like so it was making that transition. So 100% to 0, 90-10, 80-20, you know, until it surpassed the one-off revenue.
Right.
So that was one major thing. The other thing obviously was our first engagement. So even though we had a relationship with the banks, it was on what we call on-premise solutions, so what we built for them on-premise. But we had an opportunity to now have a number of banks adopt our cloud platform as well. Not for their full banking, but they had like special customers, low-end mass market customers, who the value of the business for those customers was so low that it didn't justify the licenses they pay on their own core banking. So they were happy to use us and then mirror those balances back into their own as one pool. So it was big to see that happen. One of the banks at that time, Diamond Bank, launched something they called Better Savings. It was a hit, and they ran off of our platform. So we were like, wow, so banks would host their data on the cloud. So that was one. We also did our first fundraise, which was really interesting as well.
What year was that?
This was 2000 and this was 2014. A South African, and it was a quoted South African company, quoted on the Johannesburg Stock Exchange. So we closed that round, and it was purely, they just reached out, like we just connected. We didn't, it wasn't get an advisor to find investors.
So not the typical fundraising journal.
Not the typical fundraising, no, it wasn't. They're strategic as well, so they're not a financial investor. But it exposed us to raising money and dealing with a third-party shareholder and an international one for that matter. Yeah, so that was a big milestone for us at the time when the funding environment wasn't really as exciting as it is now. And then, sort of the other final thing I'll talk about over the period is now diversifying that product, especially for commercial banks. So we built on the cloud something for card issuance that shrank the time it takes to get a new card from 2 weeks to like 5 minutes. We extended it so you don't even have to walk into a branch. It's now like a box, like an ATM, a kiosk, you punch in and you get a card.
Yeah. Yes. I heard about that like a few days ago, and when I go back, someone like, oh, if you just go to the ATM, you can just like print it. I'm like, oh.
Yeah, so that's where we're the ones doing that.
Interesting.
We did that. We did something for lending, automating the lending process and collections of loans. We did something for agent banking. Yeah, so kind of diversifying into those areas was.
Have you ever tried accessing an app or playing a game that requires you to accept privacy policy and then you just tick to accept without actually reading it? I'm very guilty of this, and I think a lot of people are. The thing is, like, we're almost always in a hurry to just get on board with what we're trying to do, and sometimes, like, it's really fun and entertaining that we don't pay attention to the privacy policy. But you know what? They might actually be selling your personal data to third parties. I listened to the privacy policy episode of the IRL podcast, the one supported by Mozilla, And he talked about how privacy policies can be lending to redundant and sometimes confusing. And sometimes these companies do this on purpose. Yes, they actually want you to tick without reading because they want to be able to sell your personal data to third parties to do God knows what with. It's crazy, right? Listening made me realize and decided to become maybe more conscious about just making sure that I am very mindful of what I say yes to, what terms and conditions I accept when on the internet. Because like online life is our real life, right? And the more we spend so much time on the internet, the more cautious we have to be about what we consent to as regards to our personal data. I've learned so much from just listening to the IRL podcast. It's one of my favorite podcasts now. I think everybody should actually listen to it. There's just so much to learn about the online world that we so enjoy engaging on multiple times in a day. IRL podcast is available anywhere you listen to podcasts. Just search IRL online in its real life, or you can visit irlpodcast.org and listen. It's pretty good. Let's go back to the video.
So if I have to, maybe like 3 questions. So it feels like you've built like multiple things for banking. Is that the reason you're like, yeah, we're done, we want to go into like a totally different space? That's one question. But the another one, maybe answer this one first, is aside learning on saying, hey, let's prototype instead of doing project, which is what Parkway was doing,
yes,
and that many ways into transition. Are there any things that you learned in that first, I think, 3-4 years of building your first company that you've taken to how Appzone and Zone have been built? They're like, oh, because I was able to do Parkway, I didn't make the same mistakes when I was building this.
Absolutely. I think the biggest one would be like the importance of culture. Yeah. I think one thing we took was we realized that the way to enable high output and high performance requires a culture that is positive, a culture that is supportive, and but without being complacent. Yes. So a big one was how to like sort of keep the team motivated, keep the team having fun while they are pushing very high output. So that was something I think as an early startup in Parkway, we probably didn't have that experience, but we saw some of the ramifications with the way the team felt and so on. So I think that was, for me, maybe that was like the biggest one.
Culture.
Yes, culture. And at that time, it was around that time when Google was really like the trend at that time, and of course Google culture then Google culture was the blueprint SI unit. Yes, so we studied a lot of what Google was doing and tried to see how do you recreate that kind of culture to maximize output and maximize the experience for the team.
That makes sense. Are you seeing the result of that now?
Yeah, I would say. I think we've created an environment that's really empowering. We believe in autonomy. We believe in empowering people to surpass their limitations. We believe in selecting the very best. You know, so the way I think about it is, if you get the best people, give them the best treatment, and then inspire and empower them to perform at their best. Yes. That's how we are. So I think, significantly, it's and it's gotten so that journey. You know, your question in terms of what we learned didn't stop after Parkway.
Right.
It's continues. You keep learning in that direction.
Yeah.
What works? How do you continue to create this kind of environment?
Yeah, that makes sense. So to the original question around, if you're already doing so many big things and you guys like almost own the space for infrastructure, like from just building cloud platform, you're doing ATM, do card insurance, why blockchain? Why not just like, you've been doing this for like 12 years, and like now you want to go into something and start all over again.
Exactly.
Why?
Yes, I agree. Even me, I need to check myself, you know, whether I'm really okay. But the thing is, the original passion was payment. Okay. And I'll tell you how that's done. So I told you what led to all of this was the payment idea I had and
when you were in school, yeah.
Yes, and I brought my friends together and we pushed it. We didn't get it out. So after, having established ourselves quite significantly within banking, that itch to make payment frictionless. There's still a lot of friction in payment, and it was still there. So it was a small team. We said, look, let's just incubate something how can we make payment really frictionless? And there's some interesting ideas. Built an interesting interface application that combined messaging with payment and like sharing, and some interesting, simple but very, very superior UX for payment. And then when we finished, we realized that it's not just the interface that where the friction is, because we now needed to, okay, you have to actually do the payment. After you do all this fancy stuff, interacting with the customer, money has to move, which requires connecting to the banks, and that requires infrastructure. The existing infrastructure at that time, we had to engage them to say, look, let's use, you have something, and it was a lot of friction. There was issues of reliability, cost, and all of that. Yes, so that's what triggered our thought process, and we were forced to think about it differently because you need the regulatory approval or license you need to play in the infrastructure space. We didn't have, we weren't even close to having at that time. So we had to think about it differently to say, is there a form of infrastructure that does not require, that does not work this way?
Right.
Yes, and that's what led us to think about payment in the way we've thought about it on blockchain.
Yeah, that makes sense. And you're Africa's first premier blockchain infrastructure company. Yeah. What does that mean? I mean, because when we think about blockchain, most Nigerians, we think about crypto and we think about the crypto exchanges.
Yes.
But you're not doing a crypto exchange where I'm going to buy Bitcoin. So like, what's the difference? Okay,
so crypto exchanges and digital tokens are cryptocurrencies run on
the blockchain.
Something, yes, the blockchain, which is basically a database that is decentralized, right? So you have copies of the records across different physical nodes. So you have Ethereum, you have Solana, you have Cardano. So basically, that's what we built in Zone.
Okay.
But purpose designed for payment. The big difference as well is those public chains we all know about, they are unregulated. So anybody's free to do whatever they like on them, and that's fine for certain industries where the risk level is not, or what's at stake is not that high. But for financial services, the implication is that you see a lot of fraud, a lot of malicious behavior in them. There just is no way to figure it out. Unsuspecting people who don't have that deep understanding fall victim. So what we are doing, what we've done basically is to replicate the power of those same systems, but under regulatory oversight, and then apply that to payment infrastructure. That is, apply it to the purpose of connecting banks and financial institutions together, so that any client, and when I say client, our clients are financial service providers. Any financial service provider who has customers and wants to build a payment solution for their customers can use this network.
Right, and that can be for crypto, or it can be for fiat money.
Yes, for fiat, today for fiat.
Right.
Today for fiat, because that's what the regulation requires. But it supports digital currencies as well, whether crypto or CBDCs.
Yeah.
Yes, actually the roadmap is to evolve from processing fiat to be able to also incorporate, to allow these new digital currencies, both CBDC and crypto, to be accepted on the existing traditional channels. That's
a long-term goal. That makes sense. Have you ever built for B2C directly? Because what you're building now is for financial institutions as a client. What you built at Appzone was also like mostly for the banks.
Yes. It's all been B2B. I mean, that app I said that triggered Zone.
Yeah.
Would have been our B2C stint, but it didn't, because when we saw that friction, we said, okay, let's build something to enable the infrastructure part of this app. But when we saw how involving it was, we felt
there's still more work to do.
There's more work. There's no need. Just allow this. Let other people build this layer.
Yeah.
And let's do the infrastructure work. So we've gotten very accustomed to the B2B side, and focusing on pretty much the same set of clients.
Yeah.
From Appzone, same banks, and now
But just
fintechs
a
and so on.
different product.
But with a different product, yes.
That makes sense. So like this year, Zone was, by Financial Times, was ranked as one of the fastest companies to grow. What did that mean for you?
Yeah, well, it was, I mean, for me, it was a fantastic recognition. I mean, Financial Times is very reputable. What we are doing is very radically different, and we need a lot of credibility at this time. We have engagement with not just the conservative banking ecosystem, but the regulators as well.
Yeah.
You know, the technology is, will I say, controversial, of course, because of crypto.
Yeah.
So there's just too many things that require as much credibility as you can get. You know, so it was very good for us to see that recognition from a reputable global.
What do you think has made you one of the fastest companies in Africa to grow?
So I think it's the nature of the technology we are deploying,
right,
and the challenges that we are solving. The challenges are huge. Now, what has happened is we need payment infrastructure, and we saw some of that during the cash scarcity.
Yeah.
Scalability, reliability, big issues for customers. Issues around chargebacks and dispense errors. So you use your card in the POS, you're debited, and it fails. Your money is stuck for weeks because there's a manual reconciliation that has to happen. That's fine for people who are more comfortable, middle class and upward, but low income guys, so imagine you have just 20K, that's your last 20K, you do a transaction to buy food, and that 20K hangs, right, for weeks. So these issues are deep-seated issues that limits scale of adoption for payment. And what we've done is very unique, you know, applying the power of blockchain to solve the transparency, immutability, the decentralization, to solve these real problems. And because of that, both our target clients, both banks and fintechs, especially some of the real big fintechs, have been super excited to say, hey, let's jump on board this stuff, in spite of how radical and even potentially contentious the technology is. Yeah, so people wouldn't have believed that, you know, not just are you trying to connect banks together, that no other private company has been successfully, like no other, all of the existing payment infrastructure providers have all been started by banks, or owned by banks at some point. So no sort of non-bank entity has been able to pull it up, but you're trying to do it with this radical and contentious new tech platform, you know. So again, it's unlikely, but because of the opportunity, the problem, the scale of the problems, and how much the industry has been trying to solve them, that's why we think we've been able to get the...
That makes sense. What would you say has been the biggest lesson you've learned as an entrepreneur over the last almost 20 years?
Yeah, so doing quite some, which one is biggest, but...
Maybe top 3.
Yes, I would say, so I think one big thing is being knowledgeable and proficient as an entrepreneur in whatever area one is very critical. That's one big thing I've learned. Like every successful entrepreneur is a guru in that area.
Yeah.
Like so a lot of people don't see. It's not so clear. It's not so obvious initially, because we tend to underrate that factor and think of other things. But that part is like really critical, and it doesn't mean knowing everything, because there are other parts of the business, but the core of the business, being like a guru in it or understanding very well, is very critical. That's one. The other thing is that, you know, I think in this environment, and it's probably the same in other parts of the world, but for sure in this environment, like sometimes things take time, more time than you would have expected, but doesn't mean they're not going to work. Yes, so you've seen that again and again. And I think I've even seen it with friends and associates doing similar stuff. Sometimes things take more time longer than you think, but then they still build momentum and even still wow you. So that is also.
So that's a patience factor.
Yes,
like
patience.
If you're bullish on an idea,
yes,
can like stick to it.
Yes. I think another one that I think has been critical is also focus. I think focus also relates to the first one of building the expertise and capability. But I think focus is also key because, like, dissipation can slow you down because you're putting effort in multiple areas and you're not able to move as fast in any one area. So focus, I think, especially when resources are limited, right? When entrepreneurs get to the level of Jeff Bezos or Elon Musk, can afford to do like Elon Musk, right?
Yeah.
Buy this, do this, because the resources are there. But at the earlier stages of entrepreneurship, massing resource and focus in a particular area to make traction, I think, is really, really critical to success.
Yeah, that makes sense. Yeah. 2 final questions.
Okay.
So you've been doing Appzone since 2008.
Yes.
That's a long time,
yeah.
right? What has been like a critical factor in just staying for the long term? As against maybe even going to build something different. Yeah. But you are building something different, but the same company, same co-founders. Yes. So like that long-term game, like why that long, and like why still like the same company, same team? And I think the next one is, if you've been building for almost 20 years and you're still building the same, what does exit look like for you?
Okay, good one. So the first question is, yes, and you rightfully pointed it out. Yes, it's the same company and same co-founders, but as you heard, it's different things.
Yeah.
It's different. Even within, we've done lots of innovations within Appzone. So it's been like, in my experience, it's been like multiple startups within one startup.
Right.
Yes.
Okay.
Each entity, in fact, before we restructured, we had sort of 5 subsidiaries. You had our core banking, our agent banking, our cards business, our lending automation, and then payments. So it's been so much fun, and even sort of grooming what we see as the next generation of entrepreneurs within. So it hasn't felt like doing the same thing, for that period. But I think for me, it's been, we have a strong domain knowledge in the area. We understand the problems within financial services. We have relationships, and the problems are still there. We've solved some and trying to scale them out, but there's still some problems. So I guess it's been about, okay, this is a massive aspect of the economy. The entire economy hinges on financial services because that's where the money moves. That's the life of the economy. So it made sense, to us, and because we're kind of constantly innovating and sort of doing.
So there's always new challenges.
Stuff. Yes. Yeah. Yes. Now, from an exit point of view, I think, so we've restructured now. So what we've done is we've split the company into 2 separate companies. So our payment focus, I lead our payment focus as like you said, earlier stage startup. So this is me doing a game. So I had to go back to my house and say, look, I'm serious, I'm not crazy. I know it looks this way, but so that's that. And then one of my co-founder, Mecca, my brother, is my co-founder, leads. Myself and Wally run Zone, which is the payment business, and then the other business is everything else, which is now called Core.
Right.
Yeah. So our banking solutions, Banking SaaS platform, and so on, sit with Core and Mecca and some of our new partners running that. If when we talk about exit, I think for me, the next step in evolution, so for sure, what we are pushing in Zone is very critical. We think financial services will transform radically, very different from what you see today. Financial services would migrate to the blockchain completely, but in a regulated way. So not the way it is with Bitcoin and Ethereum and so on. It's the equivalent of those things, but with oversight of the regulators and connected into mainstream.
Okay,
That's
a big vision.
That's what's going to happen. And for me, it's a lot more efficient. It's lower cost, fully automated, doesn't require human effort. There's zero risk. There's zero risk because those monies are not in custody of anyone. If you have Bitcoin, for example, you don't need to put your Bitcoin in any bank or anywhere.
Yeah.
Right. So the risk is that the cost is low, the downtime is zero. And why is the downtime zero? Because there are multiple servers. It's not like one server is down, right? Decentralized architecture means that all of the records are replicated across multiple systems. So this is a golden age of financial services. We are laying the foundation for that golden age in Zone, even though the focus for now is payments. So I'm really bullish on seeing that transition happen as financial services migrates to a blockchain. I'm going to push it as hard as I can on Zone. Beyond Zone, I would want to keep pushing. I would want to fund it if I can. I would want to encourage entrepreneurs building decentralized applications, financial applications, mentor, encourage, advise, or support in any way to see this vision. So that's how I think of exit.
So exit for you is to keep building. That's how you answer the question.
The value to me for exit is, being able to support the transition, being able to support other entrepreneurs. Like I said, like upcoming entrepreneurs. At some point, you start to man,
can we working like this?
I need to put my boots. But then there's other guys, especially Web3, decentralized financial applications within Web3, supporting them with relationships, with credibility, with funds, if you have funds from exit, advice, whatever, to really see this transition. For me, it's about impact, and it's about being successful personally, but also having impact. The way I tell people is, I want to do well, do good, and have fun. Do well is be successful in terms of building value. Do good is impact, right? Like have a massive, be part of a massive transition that unlocks value more broadly, and then have fun in the process.
Yeah.
Yes. So that is how I think about it.
Keep building. That's the key thing I'm taking from this. My final question for you: you just talked about being able to support upcoming entrepreneurs. So if upcoming entrepreneurs are watching this video, what is the one thing that you want to tell them, right? Whether it's an advice or is a mistake that you made that's like, if you can avoid this, or is a lesson, but like one final word to upcoming entrepreneurs. Yeah.
So I'd say they should follow your passion, right? Follow your passion. It doesn't always look obvious initially, and it looks harder than it usually is in terms of being successful as an entrepreneur. That's what I think. And the one key reason why it's like that is that when you make plans for something you want to achieve in the future, you're not trying to achieve it now. You're trying to achieve it in the future. Now the issue is, you are only accounting for external circumstances that exist now.
Now, right.
Yes, that's the real issue. It's difficult to account for the way the external circumstances will evolve. Yes, and most times they're going to evolve in your favor. Yes, they're going to evolve in your favor. So what you find is, without accounting for those things, might seem or be under the impression that you're more limited than you actually are or will be. So that's something I think. Follow your passion. Of course, I trade. You have to be good at the thing.
Yeah, very knowledgeable.
That's very knowledgeable. There's just no way. So you have to be good at the thing, very, very knowledgeable about it. Follow your passion, plan to iterate, but have at the back of your mind that it would end up. It's still tough, but it will end up easier than it seems at the beginning. And one big factor why it's that way is because you have not accounted for the way external circumstances will likely, some of them will likely evolve in your favor. So yeah, that's what I'll say.
That's a really good advice. I don't think I've ever heard it like that. So just if you're bullish enough and you stay focused on your goals, like the universe will conspire to work for you at some point, as long as you stay on that.
Yes,
that's
absolutely.
That's good advice for me too.
Absolutely.
Thank you so much. It's been very, very nice getting to know you and your journey so far. I hope you guys enjoy watching this video.
Pleasure here as well.
Yeah.
Fantastic.
Subscribe to my YouTube channel and I'll see you in the next video. Peace.
Yeah.
That was good.